Good afternoon, everyone. Let's take a look at the key overnight market developments and where we stand today. So starting with the metals. After initially rising on the back of the latest US CPI data, the spot gold reversed course and slipped below 33.20, closing down 0.56% at $33.25 per ounce. That marked a second straight day of losses. And silver also fell sharply, dropping below $38 to finish at 37.7. And on the trade front, US Treasury Secretary Yellen signaled there's no need to worry about the deadline for pausing additional tariffs with China, suggesting the talks are progressing well. And meanwhile, Donald Trump announced a new trade deal with Indonesia, introducing a 19% tariff on Indonesian exports to US, while US exports will be exempt. Goods rerouted through Indonesia will, however, face combined tariffs. And over in Europe, the Vice President of the European Commission is set to meet with the US Trade Representative, and India's central bank governor expressed optimism for a favorable trade agreement. And on inflation front, US CPI rose 2.7% year-on-year in June, which is the highest since February and in line with expectations. Month-on-month inflation came in at 0.3%, driven largely by housing and energy costs. And core CPI edged up to 2.9, just below the forecast but higher than last month. So despite these figures, rate futures still show almost no chance of a cut this month, though a September cut of 25 basis points is widely expected. Trump, however, is calling for a dramatic 3% point rate cut, but Fed officials continue to emphasize caution, noting the inflation is still too high. And in geopolitics, the White House denied reports that Trump encouraged Ukraine to escalate strikes deeper into Russia. And meanwhile, US and allies aim to finalize a new Iran nuclear deal by late August. And in an unexpected move, the US has threatened to withdraw from the International Energy Agency. And back to gold. After Tuesday's strong rally, it has pulled back into its long-standing consolidation zone, typical for slow summer trading. For now, gold is expected to stay in a broad range between 3,200 and 3,500. A break below could open the way to 3,000, while a move above could target 3,800. Our updated forecast expects gold to average 33.39 in this year, about 19% higher than our previous estimate, driven by geopolitical tensions and uncertainties into trade. And finally, crude oil. WTI softened slightly, hovering above its 50-day moving average, trading in a tight range between 65 and 70. Brent showed similarly choppy action. And OPEC announced plans to boost production over 540,000 barrels per day in August, with a similar increase likely in September. While US shale output is slowing, if demand loses strength after the summer, this increase could pressure the price further. That's your full market rundown for today. And stay tuned as global markets are set for more twists in the days ahead. And thank you for watching.